Good morning. Good morning. I will ask everyone to find your seats, and if you can, this is a big space, so if you want to come more towards the front, it feels more comfortable for us. Yes. They always sit in the front row, don't they? Well, good morning. My name is Steve Huntsberger. I am the president of the Indian Valley Chamber of Commerce, and I'd like to welcome you all to our spring forum. This has quickly become a chamber favorite. It is a way to get to know fellow chamber members, hear their stories, and learn from their expertise. We're fortunate today to have the presidents and CEOs of our 4 community banks joining us for a conversation about banking and trends that they see in the Bucks and Montgomery County areas and probably even beyond. And it doesn't happen very often that we get this much expertise in the same room. So I am very grateful to our panelists today for creating time in their busy schedule to join us. So I'll make some quick introductions and then I will have just a few more opening comments before we move into our discussion. So we have Brendan McGill, President and CEO from Harleysville Bank, Jeane Vidoni, President and CEO of Penn Community Bank, Dave Freeman, President and CEO of Q&B Bank, and Jeff Schweitzer, President and CEO of Univest. Let's welcome them with a round of applause. So as I prepared for today's discussion, I realized how truly fortunate we are in this region to have community-focused banks. Our banking laws in the U.S., I think, are uniquely supportive of using local capital to create financial institutions. These profits then, created by the institutions, we get to use to enhance our local economy, right? The profits generated by these banks cycle back into the region, promoting a flourishing economic environment, kind of creating a virtuous cycle. And I think that's a testament to the foresight of the folks who established these foundational institutions, and they have been pivotal in the development of our region, really from housing to business and even the nonprofit sector. And since the 19th century, with the introduction of the railroad into this area, we have transitioned from a primarily agrarian economy to a more diversified economic landscape, and access to capital has been essential to this growth. It's enabled local businesses to reach markets far beyond the local area, as well as the facilitation of construction of homes and businesses and farms. This access to capital was and is still critical to the American dream, and I think that's something that we sometimes in this area take for granted. Not all regions have the benefits of community-focused banks, where the directors, managers, employees, and shareholders are invested directly in the prosperity of the local community. We also need to be aware, and I think this is an important part, of how long these banks have really been a part of the local landscape. And I should have checked these dates out with you, so let me know if I'm wrong. Univest was founded in 1876. I'm getting a head nod. Q&B was founded in 1877. Penn Community traces its roots back to 1885, and Harleysville was founded in 1915. So I think that and alone.
We weren't there.
Yeah, no. They're too young for that. They remember it, but I think that longevity deserves a round of applause. So we are indeed fortunate to have these institutions as integral parts of our community. And let's delve into today's discussion by learning more about how these banks continue to shape the economic landscapes of Bucks and Montgomery County and beyond. And we also want to learn to know a little bit about our panelists. So, Brendan, let's start with you. Tell us a little bit about yourself, your career path, and what you enjoy most about your job in the industry you work in.
Okay. Well, thanks, first of all, for having us. I did just learn that I guess I'm the youngest on the panel then, from 1915, so that's pretty good.
A modern bank.
Modern bank. I grew up in the Philadelphia area, in the Mount Airy, Chestnut Hill area. Out of college, I went to work for Deloitte and Touche, and I was there for 5 years. Harleysville Bank was my first client I walked into as an accountant. After 5 years, somebody whispered in my ear, they might be looking for a CFO. So I went through the process, and I ended up starting at the bank in 1999. I've been there coming up on 26 years, 10 years as CFO, about 10 years as COO, and now I'm 6 years as CEO. I think everybody would agree with this, that our job is it's just a great job. We get to get up every day, help the communities thrive. Everything we do is really a servant's attitude, from mortgages to commercial loans to helping businesses get started. So at the end of the day, we're earning a living taking care of people in the communities, and that is just something very rewarding.
Hi, I've been in banking 40 years, right out of college. I grew up in the Lehigh Valley, and my first job was at a bank called First National Bank of Allentown, and that was in 1983. I also worked for a magnificent bank called Meridian Bank, some of you might remember, and provided me with a lot of training programs, a lot of different positions in all areas of banking. My background, my education is in business. My career path started in advertising and marketing and moved on to strategic planning and then all things banking as I progressed. I've worked for large banks and small banks along the way. And I would say my most favorite thing about my work is, I forget the name of the TV show, but it's How It's Made. I think it's, it's related. So, I've been on a truck and they're showing me how they make mulch. And we get to go behind the scenes making candy and all kinds of different areas of businesses that we get a unique and intimate look at. And I really think community banks become partners, right, to those local businesses, and it becomes so much more than just business. So that would be my answer for that.
Well, it's great to be here. It's great to be up here with three other community bankers. I really believe the community banking industry is responsible for the adaptability and the resiliency of the U.S. economy as well as the local economy. We make a big difference in the world. I was the youngest of 6 children, a baby boomer, from Columbus, Ohio. So I'm a Buckeye fan. Sorry about that to all the Penn State people out there. I had my career path. I started out as a teller at a downtown savings and loan in Columbus, Ohio in 1975. So I'm closing in on 50 years in banking. And it's been fascinating. I did all my schooling part-time, graduate school part-time, graduate school banking, all that stuff, and worked the whole time. And really got the chance to do a lot of different things. It's really been a great career. I've been at QMB now since 2010. First couple years, worked with Tom Bisco, and Tom retired into 2012 and took over as CEO. What Brandon says, basically, and what Jeane says, like me too. I love my job. I love what we do. I love working with all of our team. I love the communities. I love our customers. It's just everything about the job is fantastic. I never get up in the morning and go, oh boy, I hate going to work today. It's never like that. It's a great place to be. And I like, and the industry is the same way. I think we do a lot of great in the world, in the country. You look at some of these rural areas out in Iowa and those places, community banks are the only bank in town. And if they didn't exist, there wouldn't be any bank for those farmers out there within 100 miles. So it's a really important industry, and I'm proud to be a part of it.
All right, I'll bring up the rear here. I'm very similar story to Brendan's, actually. So although I didn't grow up in the area, I grew up a little north of Scranton in a small town, Tunkhannock, Pennsylvania. And, ever since I got my first calculator, I just wanted to be a banker. So I'm just kidding. So went to college out at Notre Dame and then came here because it was a central location to family. Parents are up north, my brother's in Baltimore, so it seemed like a good area. And I started my career with Ernst & Young and worked for them for 12 years, and Univest was a client of mine. And as I got to audit them and just see the culture and see what they did every day, and seeing, you know, people like Bill H., Leon Moyer, and Marvin Anders, and just pillars of the community, I always thought it'd be a pretty neat place to work if I ever had the opportunity. And then when Wally Beeler, who was the CFO for 42 years, was retiring, I just called him and said, "Hey, congratulations, great career. Wish you the best of luck." He's like, "Do you want to throw your hat in the ring to be my replacement?" So took the leap and became the CFO. Was that for 5 years, was president COO for 1 year, and now this is my 11th year as CEO. And it's been just an unbelievable, fantastic run and experience. And you know, the thing I love best is, you know, I always say to our employees, we're in the business of helping our customers achieve their financial dreams. And whether that's, you know, helping somebody buy a home, helping, you know, a business grow by providing capital, you know, helping somebody save for retirement, ensuring what's important to them. There's so many different ways that we touch people's lives every day. I say, absent being in like a nonprofit, I don't know an industry that you touch people's lives as much as we do. And it's a very admirable profession. You can go home every night and feel really good about the impact you've made on people's lives and how you've made the community better. We all do it through philanthropy, volunteerism, just the impact that we have every day to kind of just make our community stronger and better is just feels really good.
Thank you, Jeff. Two comments that I want to make real quickly before we move on. You did not see the conversation that was happening before you all got here. I want you to know that these four bankers like each other. No, seriously. I mean, they know each other. They're friends. There's a little bit of competition, but you know, it's good competition. It's this steel sharpening steel, and it was really awesome to see the camaraderie that you all have. I probably should also mention, I think we have a few retired presidents and bankers. I know we have Leon Moyer is here, and I think Ron Geib is here. Do I have any other retired bankers or CEOs? So we have, you know, when they retire, they don't go away. They stay here, and I don't say that in a bad way because I love them all. And they're here and continue to be part of what's going on. Jeane, let's start with you next. Can you provide some insights into the economic health and trends of Bucks and Montgomery counties, and how that may be impacting and affecting our local banking sector?
Sure. So Bucks and Montgomery counties represent being part of a really vibrant growth region, I would call, in Pennsylvania. Montgomery County has a higher growth rate, and I'll leave some of my peers to talk a little bit more detail about Montgomery County. We have 2 locations there. It's more concentrated in business activity. There's certainly vibrancy in growth, both in personal households and people coming into the area. Bucks is incredibly unique. As you know, tourism fuels Bucks County's economy, and in addition to that, we have a lot of creativity going on in businesses. We also have the biotech center there, which is creating almost like a corridor of tech, which they're working to build right now. But I would say that Bucks County overall has more of a slower growth and almost flat. But that's not necessarily a bad thing, because I always talk about Bucks and Montgomery, let's call it Philadelphia, and the 5-county or surrounding area. That's what makes up a lot of our economy, even for some of you who are sitting in this room, because we draw people from those areas. Beautiful places as well, and there's a lot of preservation that goes on in Bucks County as well. But overall, you know, our assessment is that those counties are healthy, vibrant. We are in an area of opportunity for the future, and we do have a number of community banks participating. So I'm feeling very, very positive about the trends. I think those trends will continue. I think Montgomery County, and you'll hear some more from, I think, Brendan, you're going to give some numbers, but accelerated growth in Montgomery County, and we all participate in that market. So very healthy.
It's a great economy around here. It's diverse, a lot of different industries, big farmers all over the place, and they support a lot of the industries and areas. So we typically don't see the ups and downs here as much as you see in parts of the country. You don't have we were out in the oil patch in Texas. Everything revolves around the oil prices. We don't have that in the greater Philadelphia area, but greater Philadelphia area, Lehigh Valley, all the markets we're in are all vibrant. We had a couple of advisory board meetings with a lot of our business customers the last couple of weeks. They're all still reporting business is increasing, everything's going well. When you look at all the economic factors, it just appears that we should be having a recession, but there's nothing on the ground that indicates that. So far, so good.
Yeah, here's a surprise. I'm going to echo many of the comments from my panelists. No, I mean, we're in good markets. You know, Bucks and Montgomery County are two of the wealthiest counties in the state of Pennsylvania. You know, when you get into Philadelphia, it's a very meds and eds type of economy. But we do have a lot of colleges in the area too, which can help feed talent and a workforce going forward, which is always very important and a very healthy thing. And the diversity of it, you know, there's nuances between the counties, but overall, when you look at like the 5-county region, as Jeane said, you know, there is a lot of diversity in business, which for us as bankers, we really like. You know, we don't like to be overly concentrated in any particular industry, any particular thing. Having that diversity in our lending base and our customer base really helps us be more resilient and be able to continue to provide capital and support the business environment. There is a lack of housing. That's everywhere. That's just not locally. Nobody wants to sell their homes. When you have a 3% mortgage, why would you want a 7% mortgage? The funny thing is, everybody in this room's probably had a 7% mortgage at one point in their lives. So rates really aren't that high, but coming off of zero, they feel really high. So, you know, housing is an issue and will continue to be an issue probably for a while as long as rates stay high, which all indicators are that's going to continue too. So, but overall, it's a very resilient economy. The consumer continues to be strong. There are some weaknesses at the lower income levels, but there's still a lot of money out there. When you funnel $3 trillion into the economy, it takes a while for it to work its way through. So the economy and the consumer continue to still be pretty healthy, and we don't see that changing in the near term.
Jeff, I'll tell you, my first mortgage was 8.5% with 3 points. Not something I'm proud of. Yeah, I would also emphasize that the Bucks and Montgomery County, we're still in counties that are growing. There's lots of areas that their growth has been stagnant for a while. Yeah, even though there is a lack of housing, you still see housing going up, you know, as you drive through the roads. Not everybody likes that because you want open space, but we have the need in the community to do that. And I think one of the other things that the four of us experience is we do the same things, but we also do things, serve the communities in different ways. So our customers are similar. We have some crossover on our customer base, but the uniqueness and the diversity, as they were talking about in Bucks and Montgomery County, allows us all to participate in that because we know we all bring something special to the table.
A number of years ago, Rob Wunderling, I think most of you know Rob, was the president and CEO of the Philadelphia Chamber, and they instituted something called Grow PA. So I had Rob come and talk to the Chamber, and something that I found out, which I didn't know, is that within a 45-minute drive of here, 75% of the economic output of Pennsylvania happens. That's an amazing thing to think about, considering it takes you 6 hours sometimes to drive up to Erie, and that 75% of Pennsylvania's economic output happens right here. So you chose good communities to be Dave, let's start with you on this next question. How do you anticipate technology affecting banking and the client relationships going forward? That's just been exploding recently.
Yeah, well, you have to have good enough technology to stay relevant to your marketplace, right? So you have to be a fast follower, and remember a banking conference, somebody said, fast follower doesn't mean 4 years later. You know, when consumers and businesses are adopting technology, you have to stay up with that. So one of the things we definitely have a growth strategy at our bank, and part of the reason we have that is we have to pay for increased costs, and one of those costs is technology. Big thing out there is, you know, everybody's talking about AI, and of course, you're looking to use AI to improve your processes, provide better customer service, but also we're going to see AI used as a weapon against us to defraud us. So that's going to be the next arms race on that side. But that's what we always feel about it. We pay attention to it. We always, if something comes along that we haven't adapted to quickly enough, we make it happen, and we do view ourselves as a fast follower of all the technology.
Yeah, it's an interesting time because we have customers who literally will come into our branches just to say hi, down to customers who will never go into our branches but still want to bank with us. So technology is incredibly important. It's a huge investment that we're all making every day to keep up to speed, because the bar's been set by the Amazons of the world as far as what a good customer experience is when you go on your app or you go on your computer or things of that nature. So we all need to make sure we're partnering with the right firms so that we can continue to go to market with really good technology. We don't have $2 billion technology budgets like JP Morgan. But that doesn't mean if you don't partner with the right people, you can't have really good technology. I do think technology is a leveling field. We can't have 3,000 branches, but we can have a really good app, and we could have a really good experience online, especially when you marry it with your call center and things of that nature. We've invested just recently. We launched where small businesses can get loans and open deposit accounts all digitally online without talking to anybody. Now, if they do want to talk to somebody, they can come into the branch and have the same experience. So it's something that we're all focused on. We need to continue to get more efficiency from it in our operations because it is a big spend. But it's something that we're all going. It's here to stay. The digital aspect of banking is here to stay. But with that said, what makes us all unique and important is that personal touch. The QMBs and the Harleysvilles and the Penn communities and the Univests, we can all have good technology. It's the personal touch when you come into our locations is what makes us different. We know your kids' names, we know your dogs' names, we know, we have that relationship with you, and that is important, I think, and that's something that no technology can replace.
Yeah, I think that is unique about community banking. I have 5 kids, and I don't know if I didn't have the job I had that they would ever step foot in a bank. It's just not how they go about it. They do everything on their iPad or their phone. So that is something that we have all adapted to. But I think Jeff hit it on the nose there, that it's the personal touch that banks like us can provide. Because when something goes wrong, all the convenience that you provide, they want to be able to pick up the phone and actually talk to a person. I think we've all experienced the technology where you're trying to chat with somebody and you're not really chatting with the person. You're trying to call somebody on the phone and you're on for 20 minutes just hitting buttons and you get so frustrated. But with community banks, that personal touch is really what separates us from the bigger banks. So technology is needed. And the good thing about it too is that even as a smaller bank, we can compete with the bigger banks on the technology side because the price point has come down, where again, we're very proud of our app, our website, the technology that we have for our customers, we believe is as competitive as some of the bigger banks. So that allows us to compete with those bigger banks.
So ditto on a lot of what my peers here have talked about as far as leveling the playing field and that we have all the technology we need. I think the true, for us, I think we are going to remain relevant because I don't know if you've noticed, but things have not gotten simpler, they've gotten more complicated. And so when someone's looking for a mortgage online and you can choose between 22 different packages of products, what kind of rate structure you want, how long you want the term to be, we're actually finding even the younger generation seeking guidance and counsel. And I think there's the difference, is how we apply our technology. So if you want to not talk to anyone, as Jeff said, that's fine. But we actually don't find that happening all the time. And in Bucks County in particular, the properties are all unique. Try using an automated appraisal service that gets you from, start to finish efficiently, and it's probably not going to happen. But I think the bottom line is technology for efficiency is awesome. It makes people's lives easier. Technology for efficiency for the sake of disconnecting a customer from the business they're dealing with, we've never felt is a positive thing. And we actually want to try, and we're of the size that I would say that I'm using kind of a term, but we see our customers, right? And that someone at our bank knows you really well, and probably pretty many people know you pretty well. And it's the culture that we have. So I'm not scared of technology. AI is more of a threat on the fraud side. I think it's going to have some awesome uses as we go forward in the business world, but it's something that that we're watching for.
Dave started. Jeff, let's start with you for the next one. Are there specific challenges or opportunities unique to the local economy that your bank is addressing and businesses should be aware of?
I don't know if there's anything unique to the local economy. I think a lot of the challenges right now are very macro. When it comes to employment, there's still, the labor market is still out of balance. There's still a lack of talent when you're talking about skilled labor and certain, technology labor and things of that nature that everybody continues to have to pay up for. I know we're looking at even just getting, people in branches is hard these days. There's a lot of competition for labor, and that continues because it's still out of balance. The rate environment is going to continue. At least for the foreseeable future. The Fed they announced today they're not going to do anything with rates today. And I'm on the Federal Advisory Council down in DC for the Philly Fed, and talking to all the reps from the big banks, because I'm the second smallest bank on it, from around the country, the story's pretty similar around the country. Everybody's dealing with labor issues. Everybody's dealing with inflation. You are starting to see savings getting eaten up. So you're starting to see a slowing in the economy. You're starting to see a slowing in loan demand. So things are slowing down. They're still pretty good, but things are slowing down. So I think everybody's cautious. But yet, as Dave said earlier, we've all been surprised by the resilience of this economy. In December of 22, Bloomberg put a 100% chance of a recession in 23. Didn't happen. Jamie Dimon, who many of you as the top banker in the country, there's a hurricane right around the corner. Well, that didn't happen. So the economy continues to be resilient. I think the diversity in the economy is a good thing, especially locally, and that will help us. As we've said, we don't see the highs and we don't see the lows. So even if there is whether it's a soft landing, a mild recession, whatever, I don't think the local economy will feel it that bad, but there is a slowdown that we're seeing, especially in loan demand. And part of that, I do think, is also because people are expecting rates to be cut eventually. So they're putting some things on hold, which also does slow things down.
Yeah, I would agree with that. And one of the things, the challenges, one of the biggest things we're seeing is the rate environment. We haven't seen these rates in a very long time, and there's a lot of people who never believed businesses could function in a rate environment like this. But then I go back to the opportunities. This community, the communities that we serve are so different. I think they're so different. When we were in public accounting, we would go from Jersey all over southeastern Pennsylvania, and I specialized in the financial institutions. So I would see the different communities that these banks served. And Bucks and Montgomery County, it's different. I don't know how to describe it. It's a Wonderful Life type feeling, the movie, but it's very much like that everybody knows their customers. They know each other. Now in that movie, the banks didn't get along, but we get along, so that works out well. But as far as the local businesses, the challenges that they have, the demand has slowed a little, and we're looking at it more of maybe their rate environment, but also just cautious. People have not forgotten what they went through with COVID and the downsizing that, again, because of the unique communities that we have, we experienced a lot of companies not downsizing because they wanted to take care of their employees. So maybe the expansion isn't happening right now, even if they have the opportunity. They're a little hesitant about it because they don't want to have to get in a position if we do have a recession that they would have to lay people off. So that could be one of the challenges that the local businesses are facing.
So when I saw this question, I thought to myself, I want to take the opportunity to talk a little bit about what I do think is unique to these two communities. It certainly is related to a macro issue. And I, too, was involved with the Community Bank Council in Washington for the Fed, and we talked about this. And that is that when statistics use averages, you get a statistical average. How about that for a banker's, right? Wisdom. And in these two counties, the high income earners skew the average, and it erases the middle. In other words, we do have issues here in this county with people who are working families who do not qualify for any assistance. I'm not talking about that segment. I'm talking about middle class families, and housing is a problem. And if housing is a problem, then people who work in these counties at regular jobs, not bank CEO jobs, right, and in service industries are having difficulty being able to live and work in these beautiful counties. So I think it's important. A couple of things I thought I would suggest to you today is, number one, look up the term ALICE, which is Asset Limited Income Constrained Employed, and you'll find a term, it's a national term from the United Way, and study some of those numbers, and you'd be surprised how much families are earning and then cannot afford certain things. Inflation is partly temporary, but not the total thing. And the second thing I would ask is, local officials, I know like my Bucks County commissioners were really seriously working on this, and I'm sure Montgomery County is too, because it is an issue. So I would ask the community to keep an open mind for multifamily development, right? Things of those nature that create affordable housing. Sometimes in our beautiful communities, they're not really welcomed as much as in some other areas. So the vibrant economy is for all of us, and I do think it's a problem in our country that we're going to have to be working on, and specifically in our immediate area. Sometimes when we have things, it's hard for us to notice those who don't. And we usually talk about it top and bottom, but it's the middle that I feel is really under stress.
Yeah, I mean, I don't think there's anything particularly unique to our local economy, and we've actually seen more opportunities to lend money because some of our competitors have cut back on their lending. So that's been great to have some opportunities we hadn't seen before, to have some new customers come in the door on the business lending side. I mean, the big thing that's out there, not only here but everywhere, is that a lot of the loans that are being made to businesses for equipment and particularly for real estate and investment real estate is a 5-year fixed rate, right? So, roughly, all things being equal, roughly 20% of your portfolio comes due with a rate change. All those rates are going from somewhere in the 3.5% to 4% range, and now they're going to 7.5 plus range. So that has a huge impact. So all of a sudden, you might still be making money, but you're not making as much money as you did before. So the money we're going to get from this old project to fund your new project may not be there, won't be there for a while longer. So I think over time you would expect that to slow down things, although, again, we haven't seen that so far. But we're trying to get out ahead of that. Our folks have done a great job of, trying to really stress testing those relationships and talking to those customers ahead of time so they aren't surprised when those rates come for reset and that impact on their cash flow, talking to them ahead of time about that.
Thank you. Brendan, let's start with you. We talked about this a little bit, but how is your, and maybe you don't want to share these ideas with the rest of us, but let's hear it anyways. How is your bank attracting and retaining talent? I think this is a good question for the group though in general. So how is your bank attracting and retaining talent as it pertains to the changing and challenging workforce developments that we're seeing?
Attracting talent has been a challenge. We never went remote, so we're 100% in the bank. So that takes some candidates off the table right away. That's more of a culture thing for us, that, we're a team, we're in it together. The retaining part, I think, comes down to the culture, that we want to create an environment for the team where they feel they have a purpose, that they're appreciated, and that they're respected. And by doing that, our turnover rate is very low. Again, our expenses we try to keep very low, but the one thing that we do pay up for is talent. Because for us, the team, they are the bank, they are the folks who are dealing with our customers on a daily basis. So we try not to lose focus of that because, again, they are the bank.
I think you might be hearing similar things from all four of us because we're pretty nice banks to work for, if I can give that plug, because we've worked for other banks that aren't so fun to work at. So it really is all about the culture. We've really expanded, our recruiting efforts because of the way we can do that digitally. We're also very interested in attracting team members who are very similar to the markets we serve. And even though we're not in a huge geography, there are real differences between Southern Bucks, Northern Bucks, Lehigh County, things of that nature. So we've been able to attract some diverse folks who really are local to the branches where we're at. We've opted for hybrid work environment, which seems to be working quite well so far. And that has helped us a little bit from the recruiting perspective. And then finally, we invest a lot of money in our what we call just talent management and development. Each team member at our bank has their own plan that they work on with the human resources department and their manager, and we have a high rate of internal promotion. Now, honestly, we're not a huge bank. We can't always accommodate that, but very often, and when people look around and see that you can get ahead at a bank like ours, we have a really low attrition rate as well. And we really work on our culture each and every day.
I mean, we really are proud of our culture too. I think QMB is a great place to work. We have one of the things I talked about of all of our new employees. I always spend 15 or 20 minutes with them. Is that we have 4 senior vice presidents and 1 executive vice president of the bank that started with us out of high school. So that's kind of a cool thing, right? You tell somebody that who's 21 years old, like, wow, that's pretty neat. So that's a big deal. I'm with Jeane. We've definitely gone with hybrid. We pushed people out of the bank during the coronavirus crisis, and because we didn't want all those people coming to the same building and affecting each other. So when the crisis started to tail off a little bit, we had people saying, "Can I continue to work from home? This is really great. I don't want to work from home all the time, but can I work Mondays and Fridays, or Tuesdays and Thursdays, or whatever those needs are?" And it definitely has played a role in our retention and in a tough labor market. I don't see us ever going back to having an environment where we require people to come into work other than customer-facing people, obviously. We actually had there was a real shortage of staff for quite a bit of the time after coronavirus. And we had 2 people in our customer service center. They were friends. They always wanted to go down and live in New Orleans. So they went down to live in New Orleans. They said, "Can we continue to work here when we're in New Orleans?" We're like, and we were short-staffed already at the time. We said, "Yeah, I think we can figure that out." So they were answering phone calls and doing chats down in New Orleans. So we had employees in Louisiana. So we try to be flexible about that. We think that's important. Entry-level staff is where our turnover is. We hire a lot of young people. Sometimes their life changes or they go back to school full-time. So that's been more of a challenge. But once people are with us for a year, we very rarely lose them after that.
Yeah, and I think you hear a consistent theme on culture. And, we've always been firm believers that culture drives performance. And if you have a strong culture, your employees understand that culture. I always say we take care of our customers, we take care of our communities, and we take care of each other. It's pretty simple. Be nice. It's a rare thing in this world to be nice, but, that's an expectation. And you invest in your employees. I remember when I was at Ernst & Young, I always felt like I was getting trained for something, and that they invested in me as a professional. And I've taken that, to Univest, where, we have our Univest University, and we're always trying to invest in our employees and help develop them. We have a mentor program, we have an internship program, where we really try to, enhance their careers and make them better professionals. We are hybrid also. We're 3 days in. A lot of people come in every day. A lot of people come in 3 days. We have a handful of remote employees. Similar life circumstances took them somewhere, and they were great employees, and we were able to figure it out. But, my view has always been, I don't care where, when, or how it gets done, as long as it gets done. I have 4 kids. I don't miss a lot of school plays or sporting events, but I'm also working then at 10 o'clock at night to make sure it gets done. And I feel if you treat people like professionals and give them that flexibility, you'll earn it back in spades. I remember it was one story, it was shortly after COVID, I was picking my son up on a Friday from school, and I saw one of our employees there picking her son up, and she looked mortified that I saw her. And I looked at her and I was like, I'm here too. It's okay. And I know she's a good worker. She's been with us a long time. I knew she was going back home and gonna get her stuff done. But giving that flexibility means a lot. And I think, it's earned. People, there are people that will abuse it, and you need to deal with that. But the good employees, you'll earn that back many times over.
I think the comments about culture are so important. A really easy economy sometimes allows us to forget about the culture piece, and it's not always terrible to go through some of these situations where we have to think a little bit more about our employees and our clients and our customers. So I appreciate what you're saying about that. I will also unashamedly put a plug in for our lead class. So you heard these folks talk about the importance of training the next group, and what are you doing to develop those folks. Indian Valley Chamber has a lead program. Look into that if you're not familiar with it. I think most of these banks participate with us on that too. So thank you for letting me editorialize there. Jeane, are there regulatory challenges now? And I don't know if this group understands. So my wife did CRA at Univest, Community Reinvestment Act. So I kind of learned this many years ago. You all may want to talk about the horrendous regulatory environment that you live in, but are there things that you're seeing coming up in the near future that are going to be impacting you?
How did I get this to go first? No, it's fine. It's all fine. Everything's fine. So yeah, it's becoming increasingly challenging, and it's really great that we're up here today, because one of the things is all banks are not created equal. I mean, you are listening to us up here, and we are giving you real life examples of how we are not the same as all banks. Banks in the press today, and even in the regulatory environment, are being treated, in my opinion, in a very concerning way, as though we are cheating everyone. I'm just saying that's how I feel from the press. So then, on the other side, the regulators, we've been through some challenging times, and they do not want anything terrible to happen. And the way they respond to that is by creating stricter surveillance and all of that kind of things over everything we do, which costs us money to monitor things. I'm not an anti-regulation person. I actually think we need regulations for maybe the few businesses and banks that might not be behaving properly. It's just swung so far in the other direction. that it is overkill for many of the community banks. And we suffer with that every day, and we can deal with it. And we're adding systems, and when they tell us they want something else in a different way, we respond. It is adding expense to our business sector. That's my biggest concern, is the expense, because we're here to serve. And in the long run, we don't want our model to be sacrificed for the sake of being safety, when we're not even the banks in the sector who are the culprit in many. We don't even do the kinds of businesses, some of the more complicated things that cause trouble in some of the larger institutions. So I just took a post at the Pennsylvania Bankers Association, chair of the Federal Policy Committee. And let me tell you, when I was out of college, a marketing person, you think I would be interested in that? No. But it's extremely important that we all participate. So we are trying to use our voices in an appropriate, professional way to really help the regulators and the government understand who we are, what we do, why we're different, and how this could be harmful to our business model in the long run.
Amen. I mean, regulations need to be written in a way that they're different for the different complexity of the banks that operate, right? And that's not what happens. It generally, the same regulation that applies to J.P. Morgan Chase applies to all of us here, which is crazy. And a great example of that, the CRA regulation was just rewritten by all the government agencies. 1,500 pages. I think the law was a page and a half, but the 1,500 pages of regulation enforcing a law that was passed in the 70s. And then their classifications for banks is that the lowest point for the large banks is $2 billion, which Penn Community and Univest are there. We hope to be there in the next couple of years. So you're being regulated as a $2 billion bank, exactly the same as trillion-dollar banks are, J.P. Morgan Chase, PNC, all those large banks. How does that make any sense? And so I think that's the biggest issue. We all understand regulations are necessary. We all understand if we collect deposits in our community, we have to lend money out to our community. We get all that stuff. We're doing all that stuff in spades. And it's just disappointing that there's not an understanding that you have to do this in a way that allows community banks to thrive and be successful, as opposed to what keeps happening, to keep having to add people in non-revenue positions to comply with all these regulations, and they're not doing anything for our communities, and nothing for our customers. So that's the biggest challenge, and good luck, Jeane, on that.
Yeah, I was down in D.C. 2 months ago talking to some regulators, and I said, it feels like we're under attack as an industry, and they said, you are. So that made me feel really good. But the challenge is, we all are we don't have a problem with regulations. There's a reason that there are regulations. They keep a safe and sound banking environment, which is important. The challenge is it's pushed a lot of activity out of the regulated environment. So into fintechs and things of that nature, a lot of mortgages are done out of the banking environment right now. And that's when customers get taken advantage of, because those businesses don't have to follow the regulations we do, and as a result, customers get taken advantage of and don't realize that they're getting taken advantage of. Or you have fintechs where people are having money basically on deposit with them. It's not insured. They don't realize it's not insured. They think of it as a bank, and there's a real issue out there with pushing a lot of activity out of the regulated industry. And if we were to hit a real downturn or a really hard time, it'll remain to be seen how those companies handle customers, how they handle businesses. When you push a lot of commercial loans, we have workout groups for troubled credits. We work them out of being troubled into being good customers again. We don't want to lose them. We don't work them out of business. Those are more investors that are lending money. They'll work them out of business. That's not good for the economy. That's not good for anybody. It's not good for those businesses, their families, things of that nature. So regulation's important, but it needs to be balanced. And the more we push out of the regulated industry, the more I fear that customers will end up getting hurt.
I don't know if this is the last question, so I'll try to end it on a high note with that compliance. Everything what my colleague said is 100% true. On Monday, I was actually up in Harrisburg. There was a contingency from Pennsylvania Bankers Association who were lobbying on the Hill at the Capitol for regulations to make sure that we're able to take care of our customers, but also be able to stay in business. At that same time, there was another group of Pennsylvania bankers they're down in DC right now. So I chose to come here than DC. So I thank you for that, because it is one of those things when you're down there, you just shake your head because you think you are explaining it and you make a valid point and you're like, okay, now they're going to hear the truth. They'll know. And they just look at you and go, well, thanks for coming in, but we're going a different direction. And it's so frustrating. But again, I think there's a couple hundred Pennsylvania bankers down there this week. And then there's also bankers from all over the country through the ICBA who are down there this week. And we go walk up to the Capitol. We have appointments. We knock on doors. We sit down with Congress. Sometimes it's their chief of staff, which we've all learned. A lot of times you get a lot more done with the chief of staff than you do with the actual politician, because they gather the facts and then share it with the representative of what's important. And I will say from our standpoint, when we're talking to them, we talk about you, because the way that we can get change done is saying how it affects you, the community. Because the one thing that really gets their attention is when we talk about the communities that we serve, because it doesn't matter whether they're a Republican or a Democrat, the people who vote for them live in the communities that we're serving. So that goes a really long way. So on a positive note, we want to thank you for helping us with the battle that we have for compliance, because it is a constant battle.
Thank you. And thank you for being here. Thank you all for being here. I want to move into a few minutes of Q&A, so start thinking about your questions. And I asked their permission to do this before we started. There is a 500-pound gorilla in the room that we probably should address, and I don't care which one of you or which combination of you would like to address it, but we have a bank in Philadelphia that's not doing so well, and there is, I think, concern in the news media. So again, let's go back to the news media and the unfair painting that happens. Republic First they went down. So there's some concern about that. So I think this group would probably be really interested in hearing your thoughts about that.
Thank you. Right. So this is, to people in the banking industry, this was not a surprise. Republic First has been struggling for a couple of years. They've had boardroom issues. They had capital issues. They had a huge investment portfolio that was underwater. They had a lot of uninsured deposits. It was a very somewhat similar story to Silicon Valley and Signature Bank. And let's remember, there's 4,800 banks in the country. It's not, what industry do you know that no participant will ever go out of business? Like, it's not realistic. So when things aren't managed well, bad things happen, and they made some decisions. Risk. We manage risk, that's what we do every day. And they had investment portfolios underwater. Their deposit base doesn't mirror ours. They were not a representative of a typical community bank, super community bank, regional bank, whatever you want to call it. Their balance sheet looked very different. They tried to raise capital. That fell through in February, and once that fell through, we all knew this was coming. It was only a matter of time. So it happens. The process worked. Fulton took it over. None of the depositors lost money, and everything opens up as a Fulton branch on Monday. So the process worked, the regulations worked, and the bank failed. But it is not a contagion. It's not representative of what our balance sheets look like, what the vast majority of banks look like. We're not all concentrated in commercial real estate. We have, our average consumer deposit account $17,000, and I bet you it very much mirrors my counterparts over here. So this is not something to spook the world about. I know the media loves to latch on to these things and say that this is a contagion. This is a unique circumstance. not unlike what happened last March. And what you didn't see a run of failures after that, because the vast majority of banks in this country are well run, well risk managed, have good management, and will be here for many, many years to come.
I'll just add to that something in common that SVB and Republic First has. In the banking industry, anytime you see accelerated growth, you can always assume that there's additional risk being taken. It's not the banking model that we ascribe to, nor is it that most banks, either large or small, do. So again, I would still characterize this as an outlier of strategy. I think one of the interesting things is some of those banks in the past have been, kind of depicted as the darlings because they were operating more like a tech firm or in a more aggressive fashion. And I think all of us up here understand that that's not what banking is meant to do. Slow and steady growth is sounding good to all of us.
Thank you, and I think that's exactly what everybody wanted to hear. So thank you for sharing that. I've been around banking quite a bit, and you see this stuff in the media, and you begin to start, buying into what they say. So thank you for that. I want to go into a time of some Q&A. This is a pretty good group of folks that we have here today. So just raise your hand, and if you want to come up and ask a question for the microphone, because we are recording this for our YouTube channel. If you don't want to, I can just repeat the question. But let's have a few minutes worth of Q&A. Who would like to start us off? Come on. Yes, back there. Yep. Come on over.
Hi, Josephine Martin, Management for Sustainability. Could you talk about what's going on in the energy world and how that is impacting your world? Specifically, I'm talking about local Pennsylvania, Jersey, Maryland grid and related. And if you need more detail, I can give you that. Renewable energy, solar, wind, hydrogen, those types of things, how that's impacting the business world, specifically banking. A lot of it would be probably new technology, significant impacts to the grid nationally. Local is Pennsylvania, Jersey, Maryland grid. I can see I'm speaking Greek.
and that's okay, and that may be helpful. I don't know, Jeff,
I don't
picking up your.
At our size, and we don't really play in that space much. Like, we don't have much lending to energy at all. We do some leasing to solar panel equipment companies, but that's really, really small part of our business. So it's just not an area that banks our size typically play in, I would say.
Yeah, I mean, I'm sure we have many customers, manufacturers, et cetera, to supply things to the energy industry, solar panels, et cetera, those kinds of things. But as far as the large energy companies, just what Jeff said, we don't have any direct dealings with them.
I guess I'm not so much concerned about the energy companies, but all of us, because we're all energy consumers, and the price of energy and what that does to your business if a larger part of your costs have to go to energy, whether it be us as consumers or business people.
So it works into the inflation piece.
Yes,
I mean,
very much an inflation.
It's a big
piece.
driver of inflation, the cost of energy, cost of transportation, because obviously the gas price is higher, transportation costs are higher. So what it results in is everybody operating on thinner margins. I mean, it's a cost that has risen significantly, which is impacting P&L statements for companies. I mean, we do see that. I apologize, I'm not sure I understood the question originally, but we definitely see that, and it's having an impact on businesses, whether, as I said, it's transportation or just paying for, energy to heat and do everything in their businesses. It's definitely having an impact on margins.
Yeah, and we know the consumer's also feeling that too, with the to run their household has cost more, and a lot of that does have to do with the cost of fuel, food. So that has definitely had a big impact on our consumer, if that addresses the question.
Yeah, I think it also gets back what Jeane was talking about earlier about that working middle class family. You know, for us, you know, for me, gasoline price, you know, I kind of notice it, but I don't pay close attention to it. But for that family, that can make a difference between whether they're able to do things for their family and take care of things. So it's a big deal for those folks for sure.
Next question. Yes, Liz.
First of all, as I'm board member of a local community organization that puts on events throughout the community, I want to say thank you to all of you for your support for our community. But I also wanted to ask, what strategic growth opportunities do you guys have that you can talk about for our area and for our community?
Let me repeat the question for the video. And Liz, you may need to. So what might be some of the strategic planning that we're able to share going forward for the organizations for growth going forward?
So for Penn Community Bank, as I said, we have 2 offices in Montgomery County, Abington and Lansdale, and we see Montgomery County as a very vibrant market, as I said earlier. So I would say Penn Community Bank is continuing to grow in that area. We don't have any specific branch plans. We have a long-term strategic branch plan, which I will not share. And but I can easily say that we don't have any imminent branch plans, because we are seeing that people are more willing to drive further for an appointment, you know, at a branch. It's not the same as going every week for your check. So we are serving a broad array of folks from those 2 offices, but we have an open opportunity in that area. So for us, our strategy is to retain and grow in Bucks, assertively grow in Montgomery, and then just last Friday we opened up an office in Allentown. So Lehigh Valley is also a growth market opportunity for Penn Community Bank.
I would echo, we're not looking to expand our branch network. Kind of gets back to the question of technology. Technology has allowed us to grow without physically having to grow our footprint. We started commercial lending about 15, 16 years ago. So our growth has been happening internally, even though our overall growth has remained flat. The shift in our balance sheet has grown over the last 15 years. And I would say in the next couple of years that will continue, and then we'll start seeing some net new growth overall. But the balance sheet itself has changed dramatically over the last 15 years.
I mean, we definitely have a growth strategy. We grow the number of customers we serve, every month, and that's important to us. We feel as a sign that we're still relevant to the markets, both business and consumer. And one thing we've really seen is that one business that still needs branches and likes to have a branch close by are the Main Street businesses that take cash, right? You don't want to take your cash 5 miles to make that deposit. So in the areas where you have branches on Main Street, Upper Perk and Quakertown and Coopersburg, we picked up almost all of those businesses because they don't want to they need to have a branch close by. We will continue to look for opportunities to open up branches. Certainly don't need as many as you used to cover a market. So we're going to be very selective about that, and we don't. Obviously, there's a big cost to that, so you have to be very careful in terms of growth when it comes to new branches.
Yeah, we have a pretty significant branch footprint in Montgomery County and in Bucks County, so we're not looking to open any new branches. We've actually closed a lot over the last few years because they were very close to each other. So we've consolidated some offices, but we're happy where we are right now with our branches. We don't plan on closing any, but we also don't plan on opening any. We've invested a lot in technology. As I said earlier, we now have the ability for small businesses to get a loan online, open a deposit account. So the branches are becoming more of a service and sales as opposed to, just doing transactions of cash and checks and depositing checks and things of that nature. So we're really happy with our footprint there, where we've expanded into the Lehigh Valley. We have a couple branches up there. We have 5 branches out in Lancaster County. And then in the last 2 years, we've expanded out into Pittsburgh and down into Baltimore. So those are more of our, as far as where we're investing in new locations. But we're always looking for, good talent and to add in that aspect. But I think we have the branch footprint to be able to serve our customer base at this point. And we'll be rebuilding our Skipback branch, which had a fire, which is a mile from my home, so it's near and dear to my heart. So that will finally be built. And there's nothing's ever built quickly in the United States, but we're working on it, and it should be built starting soon. But overall, hopefully we'll continue to take market share. Not from my friends over here, but from others, some of the larger players. We'll hopefully continue to take market share, because we all want to continue to grow. If you're not growing, you're dying. And with the cost structures that we all have to continue to have with technology and the like, we all need to continue to grow. So we're going to invest in these communities. I think you've heard from all of us. They're really good communities. Bucks and Montgomery County are great communities. They've served our organizations well for years. And we're all going to continue to look to invest in them.
1 or 2 more questions? Yes.
I'm curious what you see as the biggest risks and also opportunities in our area. You hear about office buildings. I don't know if that affects your guys' businesses at all, or the flip side of that, the opportunities. You see a lot of small restaurants since COVID thing. What are you seeing is growing in the industry?
Let me repeat that real quickly. So really specifically, what are some of the risks and well, I guess opportunities too, that particularly in light of what we've gone through in the last 4 or 5 years or so?
Yeah, I think we have very little office exposure. It's typically part of a building. We might have some office space there. We don't have nothing down in Philadelphia area, where the market's really been hit hard. All the big cities have had that issue. I think you always have the anticipated risks you haven't thought about, but we feel like we learned a lot of lessons in the last recession, and at least we know we hopefully won't be repeating any of the same mistakes. We might make some new mistakes we'll find out if we do go into recession, and that's really the biggest risk always. If you hit a recession and consumers can't pay their bills, they can't do the things they need to do, that affects so many other industries out there. So you always just try to recession-proof your bank as much as you can, try to be able to operate the bank and feel you can be successful in any economic environment, and that's what we strive to do every day.
Yeah, I think Dave hit the risks part of it with the potential recession. That would be the downside, but the upside is, I'll go back to the growth in houses that you see being built. As those houses are being built, obviously then small businesses have the opportunity to come in and serve those residents. I know the expansion of the Northeast Extension continues to benefit our communities because it does make a difference. As we were saying before, now somebody who lives in our communities, if they're not going to work here, they can work down closer to Philadelphia, and the commute is a lot easier. So again, that's what I think is going to continue to help our communities grow, which will then give the opportunity for small businesses to be successful.
I would say, even if there's not a recession, anytime we talk about inflation cooling, right, and wanting the unemployment rate to go up, that's one of the levers for cooling. There are businesses and people who are affected. They're impacted. So I think that the inflationary period we're in right now, the recovery period that we're moving towards from the inflation pressures, will take some years to really sift out. And then when you translate that down to our main streets, using the same analogy I used before about consumers, you've got small businesses who are impacted more than you have larger companies. And so that affects our main streets. If you can't afford to stay in business because of increasing expenses and you can't increase revenue enough, you could see some more churning of some of those main street restaurants and businesses and things like that. So I think it's a challenging business environment right now for all of us to navigate, and that includes they're vibrant communities, but there are some challenges out there.
Yeah, the challenges that worry me are more global, geopolitical, macroeconomic type of things than it is local challenges. Suburban real estate and the office space outside the cities has actually held up pretty well. The cities are in trouble. That's where you're seeing a lot of the issues. But I look at the opportunities, I think are really good. You know, this younger generation has a very entrepreneurial spirit. So you look at the biotech stuff, you look at, you know, the pharma stuff that we have in our markets, that there's a lot of just incubators and ideas being generated every day that it only takes one of them to hit to make a real big impact. And I think given our locality, you know, we're not far from New York, we're not far from Philadelphia, we're not far from the beach. You know, it's a good, desirable place to live. So I think with our colleges and universities that we have in our markets, there's just a lot of opportunity for longer term growth, assuming we could continue to keep that talent and that brain power locally, which, as I said, it's a desirable place to live. I think there's still a lot of opportunity going forward. And then that trickles out throughout the whole economy locally. So.
Yeah, just one more comment. I was just thinking about Republic First is, you know, anytime there's a merger, anytime there's an acquisition, there's always opportunities to come from that, even when they're not necessarily directly in the market. With Republic Bank wasn't in some of our market, but not in too many of those. But there is an opportunity. I know, I'm sure everybody up here benefited when that Penn got bought by BB&T. There's huge opportunities, a lot of customer turnover. So something like that happens, that'll obviously be a huge opportunity for all of us as there's an acquisition of one of the banks that has a strong presence in our communities.
Thank you. I have one discussion question for you at lunch. So you can take this one, and you can have this one too. Is a bank's primary role to lend money or create money? Fractional reserve banking. So I may get in trouble for that one, but what was that, Jeff?
Please don't print.
Oh no, we're not printing money. No, we're not printing money. Let's give our panelists another round of applause. Well, thank you, each one of you, for sharing today. I think we have a better understanding of our local banking sector, its challenges and opportunities. And I thank you a lot for taking time today. I sent this email out, and I think literally within 10 minutes, all four of you were back to me and said, yes, let's do this. So I want you to know that's the kind of leaders that you have that are willing to be part of this. And thank you for leading businesses. We don't always think about banks being businesses. They're businesses that have been so instrumental in partnering with other businesses and nonprofits to grow the region and create a place that really is an attractive place to start a business and raise a family. And we're all in this together. And we know that having you as partners, that really helps propel us forward. Couple chamber reminders. We have a joint multi-chamber mixer on May 7 at Penn Foundation. You can still sign up and join us for that. We have our annual Swing for Hope Golf Classic on May 20th at the Indian Valley Country Club. We have space for a few more golfers, and a portion of the proceeds this year will go to support the work of Indian Creek Foundation. And then we'll kick the fall off in mid-August with opportunities to meet with our local legislators. Hope to see you all soon at some of those events. Thank you again today. Let's give these folks another round of applause. And those of you that are joining us for lunch, you can head down to the Washington House, and I hope the rest of you enjoy the rest of this beautiful day. Thank you so much.
I thought we did a good job.
Thank you. I appreciate it.
Good job.